Announcing the 2021 budget, Deputy Prime Minister and Finance Minister Heng Swee Keat said Singapore is moving from containment to restructuring as the economy continues to reopen. It will be an expansionary budget with an expected deficit of $11 billion. This comes after 2020's budget ran the largest deficit since independence, $64.9 billion, or 13.9% of gross domestic product. All in, Singapore expects to draw up to 53.7 billion Singapore dollars from past reserves to fund its pandemic response.
Singapore is very well placed to continue to draw on its fiscal reserves. These two drawdowns in 2 fiscal years isn't going to make a material impact on the overall government balance sheet, especially when we're looking at overall indebtedness as being much lower than the presumed asset position of the government.
The Singapore government's fiscal plan assumes an 18.6% rise in operating revenue on expectations that the economy will expand between 4 and 6% in 2021.
The Singapore government is going to record the most rapid pace of fiscal consolidation amongst the AAA-rated economies, highly rated advanced economies. They are keeping the powder dry. By keeping a relatively strong position at the outset of the fiscal year, it does leave a bit more room in the event that the downside risks related to the coronavirus pandemic materialize.
As global economies shift due to the pandemic, Singapore will allocate $24 billion over the next 3 years to help businesses and workers transform and adapt to structural changes. For businesses, 3 platforms will forge plans to co-fund new innovative ventures, match firms and public agencies with solutions providers, and enhance collaboration between Singapore and other major innovation hubs globally. About $45 million of venture debt will also be catalyzed over the next year as the government steps up risk sharing to transform high-growth enterprises.
The government is trying to have that blueprint to bring small businesses and the mature businesses together to build this ecosystem. With the large enterprises, they have the maturity, experience, access to market, while the startup like fintech startup, they have new ideas, they are innovative, they are nimble, but they may not be aware of the full scale of the business opportunities out there.
Mature enterprises will get help in adopting frontier technologies such as 5G, artificial intelligence, and trust technologies. To speed up their digital transformation, an initiative to help firms find professional tech consultants and hire core digital teams will also be available.
Things like the CTO as a service, I think not many companies, especially the smaller companies, enterprises, have ability to hire a technology officer to look at their whole digitization journey. And all the other areas of how to digitalize, I think all these are going to come in to be very helpful.
While high costs remain a barrier for digitalization, firms must keep up as data analytics and artificial intelligence may eventually chart the path for their businesses.
The future is not about making it in bulk. The future is about customizing it. And 3D printing, additive manufacturing are all going to be able to allow enterprises, even startups, to join the manufacturing sector. So the enterprises, they are able to build a model, understanding the needs of the consumers going forward, and being able to get those products and services ready, timely, and customizing it to their needs are going to be the one that's successful.
For fintech startup Transwap, it has found a calling in helping partner firms in their digital journey over the past year. As e-commerce prospers, Transwap's cross-border payment platform and services to digitize invoices and automate finance have been in high demand.
Collaboration now becomes the key word, and and everything is connectability. Whatever you do in your business, there are always two things will happen. You need to make payment. You need to collections. That's why we come in.
Transwap currently has licenses to operate in Singapore, Hong Kong and Indonesia. So far, the firm has tapped on the government's career support program for its workforce and the market readiness assistance grant for its expansion into Malaysia and the United Kingdom. With strong government support, some say Singapore could serve as a testbed for disruptive technology that can go global.
What Singapore has been pushing right now is they're bringing the best technology, the best brains, and the best resources in terms of funding resources, in terms of taxation resources to these new fintech companies in this country, and then they're kind of exporting this to the neighborhood.
So far, the region's diverse demographics and economies open up big markets for innovative firms.
China, India, Indonesia, Japan as well. So 4 of the largest top 10 economies will be in Asia. And so if Singapore can position itself to be serving all these other economies, I think that the future of Singapore is quite good.
The transformation package is only probably one of many, many measures that the government is very focused to help Singapore to stay ahead of the game. And the transformation journey is an exciting one. I think the challenge now is how do we execute fast and effective.